Bloomberg Audio Studios.
Podcasts, radio, news.
You're listening to Bloomberg Businessweek with Massar and Tim Stenovec on Bloomberg Radio.
Sonali, have you been to Nashville, Tennessee ever?
Sure have.
Oh, why did you go?
My boyfriend's parents live there.
Oh, I thought you were going to say a bachelorette party because that's where everybody seems to go for bachelor and bachelorette
It's
parties.
great for music, too.
It is great for music. In fact, it's actually one of the fastest growing cities in the country. And recently, the Nashville Metropolitan City Council selected the Fallon Company to be the master developer when it comes to a huge deal for the city. It's a multi-billion-dollar mixed-use neighborhood called Nashville's East Bank, and it's set to reimagine 30 acres of dormant lots. We got with us Michael Fallon, the Chief Executive Officer of the Fallon Company, joining us from Boston. Mike, good to have you with us this afternoon. How are you?
Tim, I'm great. How are you?
We're doing well, thanks. Really appreciate you joining us. We love talking commercial real estate and real estate in general on the program. And I want to start big picture right now because you're coming to us from Massachusetts. You've done a lot of work in the Boston area. How would you describe commercial real estate and the environment for a developer like yourself right now?
Well, right now it's challenging generally in the market. I mean, looking at cost of capital, that's been the biggest change over the last couple of years. But that and post-COVID, the post-COVID world with office space, I think you probably talked about it quite a bit.
Oh, yeah.
People are trying to figure out how to convert space. That along with housing challenges, affordability. So all of like the main top line things that you'll hear about macro wise.
So then enter this huge development happening in Nashville that I was just speaking about, the development that you've been awarded at the Fallon Company. How do you pencil in numbers in a high interest rate environment and make a development like this work?
Well, the market's all about timing and location, right? The timing right now is it's a great time to buy. The structure with the city of Nashville, with Nashville Metro, it's a ground lease. So that affords some optionality in how you phase the project. We do larger scale mixed use urban projects, which are going to be phased over a course of time so we can time the markets and the cycles. Right now, Nashville couldn't be hotter for both residential, but hotel and obviously the retail. If you were there for this, as you mentioned earlier, bachelorette parties, different festivals, different music events.
Very good food
Nashville,
too, I should say.
Great Southern food. But to get directly to your question, how do you pencil? Well, Nashville's got a very, very, I would say, a business-friendly climate where the city's reinvesting in infrastructure, transportation infrastructure, infrastructure for new development. So the East Bank, which is parking lots, not all of that infrastructure burden is necessarily covered by us, the developer. There's the $2 billion Titan Stadium, which will be next door, that will cover some of it, and then some other civic institutions as well.
So how do you feel about the growth of the area? You know, on one hand, we were just talking about how Nashville is very clearly a fast-growing area, a lot of people moving there, a lot of businesses moving there as well. But how vulnerable is the area to things kind of slowing down at all? If you're building commercial real estate, kind of thinking through how to navigate any potential volatility here in this short-term kind of upward trajectory.
Ton of volatility in the short term across the board in every market, for sure. Nashville's not immune to it. Certainly in the apartment market, there have been a lot of buildings that have come online in the last year and will continue for the next year. But when we look at developments, we're looking at multi-year deliveries. So we're looking at deliveries 4 or 5 years from now. And the cycle for this project it's 30 acres. So we're looking at a 10, 15-year horizon. When we're looking at that, we're looking at the main drivers of Nashville. Obviously, you've got education with Vanderbilt and Belmont and Tennessee State, but healthcare, huge, a massive driver for Nashville, along with tourism.
How are you thinking about some of the surrounding areas that have seen a decline in rents as a result of sort of the cooling of the post-pandemic boom that we've seen in the last year or so? Sunbelt areas, in addition to that, Austin, Phoenix, not necessarily surrounding areas, but areas like Nashville that saw explosive growth during the pandemic. How do you look at those? I know you're longer term, but how do you look at that?
Well, we look at that and we try to isolate the noise from what's, the baseline. So we saw such a run up so quickly during COVID that we think that was probably an anomaly. So now we see more of a normalization. Probably slightly different than Austin or some of the Florida markets. We think Nashville has a lot more runway. Again, the apartment market, definitely there was a lot of building over the last few years and a lot of supply coming online relative to what's been in Nashville. The long-term drivers, we wouldn't be making the investments that we are, and neither would other large companies unless we saw the runway. Sunbelt cities, they definitely had a lot of people pouring capital into them very, very quickly. So normalization, ordinary course of action for us, but priced into what we're doing.
I know we've been talking about why Nashville for a minute here, but I guess I want to double down on the question here because clearly, you're speaking to us from Boston. Why is Nashville becoming an attractive area versus some of these other big cities that you've mentioned?
Well, we actually started in Nashville in 2019. So this process for this project took a long time. This isn't the only project we're doing in Nashville, but we left Boston, or not left. We expanded out of Boston in 2016, and for a lot of the reasons you might think, looking at business environments, ability to develop, how crowded the marketplace was, and ended up doing Charlotte, Raleigh, and then Nashville. Nashville, I would speak to in 2019 pre-COVID, the drivers are probably pretty similar to what we were seeing post-COVID. The difference during COVID was I would say the boom in tourism spending. That was so much more. And that's actually stayed pretty steady. But even if it, again, normalizes a little bit, comes down a bit, it's still way above trend for what Nashville was 5 years ago. As long as infrastructure can keep up, which they're doing, they're reinvesting, the state's reinvesting, another airport runway. Those are the kind of moves that make us comfortable.
Hey, Mike, what do people want in a redevelopment like this in 2024 and, in the coming years? Talk to us a little bit about not just amenities, but pedestrian access, what streets look like, vehicles not being present, those sorts of things.
Well, thanks for asking. Yeah, over the past few years, I'd say sustainability has become a big topic. This site's right adjacent to the Cumberland River. So the Cumberland River does flood. So you have to make sure that you're building for those events.
Okay.
That's one aspect, green building and sustainability. During COVID, I think we found a lot of people wanted to get outside more. So having more accessibility with outdoors, especially in climates like Nashville where it's warm for the majority of the time. The office buildings are kind of a separate set of amenities. Those are less, I'd say, offices and more kind of congregating areas right now. That's kind of the trend. Hotels, bars, restaurants in Nashville, they want to be outside and they want to have patios. So in New York City, right, you've seen the sidewalks or the parking spaces get taken over by restaurants. And I think a lot of people see that as a trend that they'd like to see continue as long as you can move around the city. So transit's important. And Nashville's working on a transit plan right now that I believe will go to a referendum soon.
What's the risk of overbuilding here? You go down to Nashville, you see all the areas around the city, and the cities outside of Nashville proper are also growing quite quickly here. Do you think that there's a risk that the city gets overbuilt right now?
There's definitely a risk that you have too many deliveries of buildings that are very similar in too short a time span. I'll always say to folks, growth solves everything in the sense that we have economic growth in Nashville, can support more development, provided that, again, we're reinvesting in transportation, municipal infrastructure, schools, all of that. In downtown Nashville, we're trying to focus on not building commodity products so that we're not competing with every other project. So we're trying to be a little bit differentiated. Things that we're doing, focusing a lot on design. So we're not just doing a box, 40 stories up, trying to create interesting design there. And then underground parking, things that make the building more attractive at street level that haven't been in the city. In New York, you're used to a lot of things that come with density. Nashville's just starting that. And so we're trying to bring those best practices. You mentioned cars and parking and streets. We want a lot of green. We want a lot of different streetscape environments, a lot of color, vibrancy, ability to do events, whether it's weekly events or weekend events. things like that.
Mike, we got to leave it there, but thanks for joining us. That's Michael Fallon, Chief Executive Officer over at the Fallon Company. It's a development company, real estate development company known for Fan Pier over in Boston. He mentioned some of the projects down in Charlotte, including Center South, in Raleigh, North Carolina, Raleigh Crossing, and Boston 66 Cambridge Street. So projects like that. Joining us from Boston. Well, let's say you're watching an episode of Succession and you see that Loro Piano baseball cap that Kendall Roy is wearing, and you think to yourself, yeah, I'd like one of those. So you pull out your phone, point it at the screen, and you're taken to a place to buy said baseball cap. Though it's there, you realize it costs a cool $625 for a baseball cap. So maybe you rethink the purchase. That's not why I'm talking about this, though. I'm talking about the technology opportunity here and the commerce opportunity. That's what Shopsense AI is working on. It's a company that allows people who are watching something on TV to shop on their phones for products that they see on the screen. Glenn Fishback is co-founder and CEO of Shopsense AI. He's here in the Bloomberg Interactive Brokers studio. Did I get the vision right for the company?
You did. It was awesome. Thank you, Tim, by
Yeah,
the way. And
no
thank you
problem.
for having me, Sonali, both of you. Yeah, the vision for us is we want to create like that lean back experience for folks who basically can shop the stream, but can we do it in a more democratized kind of commerce kind of experience? So while you're right, when someone might take a snap in a shop and want to shop that, how do we create similar items and things that are more in line with what they can economically afford? Because, when you're watching all these types of shows, there might be an incredible amount of couture around those various things, but can we make it all shoppable and make it affordable for folks based on whatever kind of economic strata? I mean, a lot of people might even love pre-loved items, and from that standpoint, making it affordable for them. These are the kinds of things in today's world we're trying to do with our technology and working with the various broadcasters.
There are two questions here because both of these worlds are changing so quickly. The world of broadcasting and media and the world of AI. So starting with broadcasting, how has the move to streaming and kind of the disruptions among all these big players been impacting the way you do business and approach these companies?
Thank you, Sonali, for the question. I think for us, we're trying to help these broadcasters. They spend so much money on original content. I mean, as lots of research around last year in Variety, they said across all these various broadcasters spent over $30 billion in creating original content, creating shows like Succession. And they need to offset those expenses in a more thoughtful way. Also, you think about TikTok, short form video, and they're attaching commerce to these kinds of experiences. So broadcasters, you think about when Friends first came out, everyone wanted to have that sweater or they wanted to have that haircut, from the various characters. There was always this element of shoppability to it. And so today with AI and being able to take advantage of that ability to turn things into shoppable items, I think that's the next frontier for these broadcasters in a very thoughtful way, because again, you don't want to disrupt those producers and all that and the folks who are building these shows. We don't want to mess with the experience. And with the ShopSense technology, we're leveraging the phone, the secondary device, in a more thoughtful way where it can leverage a QR code, but we're not disrupting. Think of it like Shazam. Okay. You remember the app Shazam?
Yeah, Apple bought it.
Yeah, exactly. For $400 million. Yeah. And the thing is, it was like discovery and inspiration, but I didn't mess with the song. Right. And that's what we're trying to do.
Okay, so let's talk about the technology, because you're from New York, you spent your career in Silicon Valley, your background is in advertising and marketing, but also at tech companies like eBay, for example.
Yeah.
So talk to me a little bit about the technology and how you're able to Shazamify video.
Okay, cool. So first and foremost, you have to get the retailers. And so our technology, what we've done is we've secured relationships with well over 1,000 retailers directly, in which we got their product feeds. And then leveraging the computer vision technology, which is a form of AI, we've built all sorts of algorithms to actually organize all that content. So when the curation and the process occurs, we're able to organize by show type, by the type of programs, or what the actual producers for the specific shows are, being able to show us what people are wearing.
Okay.
The technology can actually curate the content.
So that's one side of your market. The other side of your market is consumers, the people who are actually watching this stuff.
Yes.
And you want to buy this stuff. How does the tech work on that side?
Well, in its current format, we are allowing them via QR code. Someone on the glass, if they see an actual shoppable moment, they can see the QR code and take a snap of that, and it takes them right into our stores, where it's all curated based on various types of subjects and areas.
So that QR code will come up on the screen.
Yeah.
I can imagine it's not disruptive for like live sports or for like a game show, for example, or news. But I could see it being disruptive for a drama.
I think for various types of shows, it works really well. Like think of live events. It'll make, for sports, it'll work really well. Or, on the runway type, we for Paramount, we launched for the CMT Awards and, the red carpet, aspect of it. I think it's a really good use of the technology. I think for certain types of things, we can message people after the show.
Interesting.
That could be one thing. And then we are releasing in the summer the ability to snap, use the camera, and again, take a picture of what's on the glass and then produce results along that as well.
So you have the one word here that has been the hot ticket in the world of, investing, AI, right? How is AI actually being used to kind of change this technology, given AI itself is changing so quickly?
So for us, how we're leveraging AI is automation and scalability. And what I mean by that is the ability to, when we're building all these stores and curating all these outfits, we're letting the technology create that automatic merchandising of all the specific items in the store. So when we're taking a picture of maybe this sport coat, the technology is looking in the database of 500 million shoppable SKUs, because as I told you, we have relationships with 1,000 plus retailers. We have all their content through product feeds. And so the technology has to go through that and match all this stuff in a large way. And that's leveraging AI to create all those shoppable looks. And then we're trying to do this so from that standpoint, that's one element of it. The other element of it is, how do we become more efficient to launch different stores for all the different content at scale? Because today, in certain companies, it's done manually, and it's just not cost efficient. And so we're trying to automate that process and do it on a repeated basis.
Very cool stuff, Glenn. Thanks so much for stopping by.
Yeah, thank you so much, Tim and Sonali.
That's Glenn Fishback, co-founder and CEO of Shopsense AI, joining us here in the Bloomberg Interactive Brokers studio.